managed to make it on today, and if you're watching the recording, I hope you find this interesting. So we're just been invited on today to actually talk about what specialist lending is. So Together, as I'm sure you're aware, are very much in the specialist market when it comes to mortgage lending. So we're just going to give you some insights today, really to help you when you're talking to your clients and you may be thinking about referring some cases across to your packaging team, just so that you understand what you can actually send to us and just how broad the opportunity is when you're looking at specialist lending. So a little bit about Together in case you've not used us before. So we were founded in 1974. We're one of the leading non-UK, non-bank lenders in the UK. We are owned by one shareholder, but we have an executive team of directors, and we've been in the specialist market predominantly in bridging, to be fair, to start off with, when we came into the market back in 1974, and that's evolved into covering bridging, seconds, first charge residential, buy-to-let, commercial and development over the 50-year period. We also, myself and Lewis, who's also on the call today, we have over 800 colleagues that work out of our head office in Cheadle. And we have an amazing help desk there that will help your packaging team get your cases over the line for you when you put in an inquiry. So why do customers use specialist lending? So there's various reasons why a customer might need some type of specialist lending. Now, this can be something basic, like a different type of income stream that's coming in that doesn't fit high street lending, or it could be something like impaired credit or maybe a non-standard property type. So there's lots of different reasons why you might consider using a specialist lending solution. So we're going to go through these in a little bit of detail for you this morning, but if you need any more information, then please do go to our website. There's a lot of information on there. There's also some videos that you can watch about different parts of the specialist lending sector, including the commercial, bridging and seconds that you would be looking at putting through your packaging team. So just to pick up on the income, so a lot of clients at the moment are finding that obviously affordability can be a little bit of an issue when you're looking at any type of regulated business. And this is something that we really do excel at. So when you're looking at a client needing to use different types of income, it could be self-employed. So maybe they started a business a year or two ago. They've had a lot of costs in setting up the business. It's been a little bit lean on profit because they've had so much expenditure during the setup. Now we can actually, after they've been self-employed for a year and a half, we can actually look at the year two forecasts. We will only ask for an accountant's certificate, so you don't have to provide any books, and we will work off that year two forecast. So if you've got a client that really, you know, is struggling with the affordability, then you can actually find that being able to use the forecasted figures is going to much improve that situation. Now, we do have calculators available on our website, so before you send it through to your packaging team, you can actually check they're affordable, or Derek will actually take your inquiry and see if it fits affordability for you. Also, we can use other types of income, so we can look at using income like benefit income. Maybe it's a contract worker. So if you've got somebody that's got unusual types of income, going back to the benefits, we can use 100% of the benefit income. So again, that can help affordability. So you might have somebody that is in a part-time job but also gets child benefit, for instance. We can use both of those income streams and add them together to be able to try to hit that affordability figure for you. Now, when you're actually looking at affordability with Together, we only look at the net income. So anything after tax has been paid. So obviously on benefit income, that's not relevant, but on other streams, do make sure that you're only using the net and not the gross figure, like you would with most other lenders. We also can look at impaired credit. So if you've got a client that's got any CCJs, maybe they've got IVAs, they've had a bankruptcy in the past, they've got some arrears, there's a little bit of a challenging situation with regards to their credit. We can look at that for you. We will assign what we call demerits. So each thing gets assigned a demerit. Now, we will allow up to 3 demerits per case, but we can have some flexibility on that. So if your client has had a reason for something happening, so they've had a divorce, a bereavement, they lost their job, something's happened to affect their credit, we can have some flexibility. And again, I would always say to refer that through to Derek, and he will talk to the team for you to see whether we can assign some flexibility there. Now, we do only go back over the last 12 months when it's regarding bad credit, but we will also look at the client's payment conduct. So if they are somebody that's had a life event, we will assign a flexibility scenario to that. But if they are somebody that's a bit of a serial offender and they tend to get some bad credit, then clean it up, then they get more bad credit again, we will take that into consideration when we're doing the underwrite, because obviously there's a much higher chance that they're going to default with us if they're that type of person. So just bear that in mind. Doesn't mean that we won't do it, but we just might need more justification as to why the blips have happened. When it comes to non-standard security, we're probably the best in the market for this. So we can literally do any type of property. We can consider anything. It doesn't matter if it's a flat above a restaurant, if it's opposite a petrol station, down the road from a pub, or it's made out of an unusual property type like concrete or stone with a tin roof I've done recently. There's lots of different types of construction that we will consider. We also will look at things like if it's near commercial. So a lot of times now when you're looking at residential properties, a lot of valuers will say there's not enough chimney pots in the area, there's not enough amenities, and that can make a valuation fall over. That is not something that is a consideration for Together. I did one recently that had all commercial down one side of the property and a canal on the other side. The property was in the middle and we were looking to do a residential mortgage. We did that as a standard normal residential. We also have no LTI on affordability. So if there is a case where you're looking at affordability and you've maybe got another lender saying we can only go up to 5 times income and you need 7 times income, it doesn't matter with us as long as the net figure fits on the affordability model, then we are good to go. So you're not looking for a specific amount of income calculation. We also can look at things like debt consolidation. Obviously, a client, particularly if they've had a bit of bad credit, might need to do debt consolidation. We also have a product as well where the client can actually raise money on their residential property for business purposes. So if they're self-employed, they've got a tax bill that they need to pay, we can facilitate that even if they want to be able to do that through their residential property. Home improvements, again, we can look to raise money for that, but it would need to be light refurbishment only, guys, not heavy refurbishment. If they're needing any type of heavy refurbishment, then they would need to do the bridge first and then exit onto term. So just bear that in mind. But again, your packaging team will be able to put that together for you and advise you the best way for the client to move forward. So when we're looking at things that we can look at, so again, just wanted to highlight a little bit more for you. So you're looking at the 4 pillars of Together here. So you've got the non-standard income, which I've already sort of highlighted for you, non-standard construction types, a range of purchasing solutions, and thin or impaired credit. So just to highlight on this particular slide, a range of purchasing solutions. So we can help a client in any situation. So it might be that it's an auction purchase and the client needs speed of delivery when it comes to being able to get a bridge. If we know that there is a specific time frame on a bridge, we can prioritise that for you. You just need to let your packaging team know what the time constraints are, and they will highlight that through. We also can look at first-time landlords on buy-to-let, and that does include HMOs. And we can look at shared ownership and right to buy as well. Now, when you're looking at shared ownership and right to buy, we can take 100% of the shared ownership or right to buy figure, which does actually help with the deposit. We can also accept gift of deposit and gift of equity should that be needed. So again, direct family members only, please, but we can accept that. The only caveat on that is if it is a client that you have that is currently renting and they are going to buy from the landlord, so there's that direct relationship again, that is an exception that we can take, because we can see that there is a direct relationship between the landlord and the client that's living in the property already. And there might be a reduction in the purchase value because the landlord sees that as a quick sale. So again, we can accommodate that for you. We also can look at second charges on the property. So it might be that your client's got a very good rate at the moment, but they do want to capital raise for a reason, like paying the tax bill, for instance. Again, we can do that via a second charge. So it doesn't always have to be first charge lending with us. It can be second charge as well. And that is also included on our commercial we offer commercial second charges, not just residential second charges. So again, that flexibility is there for your clients. Now, you might have a client that needs to have semi-commercial lending. Just to bear in mind that if you've got a client that needs semi-commercial lending, it's all about the percentage that the client lives in. So if the client has got a property where they've maybe, as an example for you, it's their residential house, but they've got a lot of land and they've put some glamping pods in the garden. The glamping pods turn that property technically into a semi-commercial dwelling. But if the client is using more than 40% as their residential use, now that is the full title, so that includes the garden and any parking that might be in the area. As long as they're using more than 40%, so they're using the house, they're using part of the garden, and they're using the car parking for their residential use, we will actually accept that on residential rates. You don't have to go the semi-commercial route. If they're using less than 40%, then we would then class that as semi-commercial, and that would need to come in via our semi-commercial product. With regards to looking at buy-to-let, now we will look at any size buy-to-let for you. So it doesn't matter if it's the first buy-to-let and it's just a normal residential. We can look at that right the way through to a professional landlord who's maybe got in excess of the 4 properties, you know, looks after quite a multitude of different types of property as well. They might have a mixed portfolio where they've got some semi-commercial, they've got some HMOs, they've maybe got a couple of MUFBs along with the normal residential buy-to-let. That again is completely possible through us. We will look at all the different types of property. We can do the cross-charging if needed. And again, your packaging team will help you structure that if you need to pull out equity out of various properties for the client to achieve their goals. Now, just a little bit of reason why this presentation is happening today. It's really just to understand what the trends are in the market at the moment. Now, you know, we've always had some brokers that have said, I only do vanilla lending. I don't think there's many things that are actually vanilla anymore. When you take into consideration that 4.24 million people are self-employed in the UK now, and that is just growing. A lot of the times you are going to come across a case that maybe needs a look at the income or something like that. That does turn the case into a specialist case. Unless it can go to the high street and go to the top 4 banks, it really is a specialist case from here on in. We also can look at things like secondary income. So as you can see here, 47% of the population now have more than one income stream. So they've maybe got their full-time job and they're doing a bit of a part-time job as on the side. We will look at all of that income and we'll use 100% of it. So again, that just helps to fit that affordability. You also have a look at households renting between 2008 and 2021. That has actually gone up by 42%. I know we're talking at the moment about the tighter regulations coming in with regards to buy-to-let, but people still need to live in properties. They still need to be able to rent to you know, fit their family into a property and have a roof over their head. So, you know, don't discount your buy-to-let cases, guys. That is going to still be on the increase, but you might find that your landlords are starting to diversify, and that's where they're going to be coming into more of the semi-commercial market, the HMO market, and looking at MUFBs, purely because they get a higher return. So if you're not in that space at the moment, I would suggest maybe just having a little look at it and you know, getting yourself a little bit more au fait with the type of requirements that are going to be needed, with you giving advice on those types of properties when your portfolio landlords start to head in that direction. Now, just to go over the commercial a little bit here. So we are seeing that we're getting quite a few more HMOs in the market. Now, together we'll do different types of tenant. So if you're looking at maybe more vulnerable tenants or asylum seekers, something like that being the type of client that's going to be in the HMO, that's absolutely fine with us. That's something that we do every day of the week. We also are starting to see some landlords come into things like the care home sector. Now, if you get a client that says to you that they're going to go into a sector where they have no experience, so for instance, care homes, we will look at those. We will look at care homes for adults and children. We will want to see the right permissions in place with regards to Ofsted for children, or for the care homes, the rating system that they have in place for that. But we don't necessarily need to see experience from the landlord themselves, as long as they have staff in place that are retained within that particular care home and can demonstrate they have experience of the sector. It's not a requirement for the client themselves to actually have that experience. So again, that would be when I would reach out to your packaging team. They'll let you know what we need, and then we can help you with your client's lending. So there's lots of different ways that we can actually help you and your clients when they venture into more unusual types of property. So I've just given you some examples here to kind of bring that to life. So this particular client wants to diversify their portfolio. So they're going to be doing what I've just mentioned on the previous slide. So the first property is a concrete construction with a partial flat roof, and they want 65% loan to value. The rental income alone is not enough to cover affordability, on this particular one. So it's a straightforward solution. We can accept it based on the rental affordability, and we can do social care accommodation. So that's absolutely fine. On the second property, it's a standard construction HMO for students. Again, we will do student lets. And obviously there's going to be multiple tenancies. Again, that's absolutely fine. This case, though, has an increased risk of rental voids because obviously the students are going to be coming and going. But again, we would actually be fine with that. We also can do top slicing on this because the client wants to leverage surplus income from other properties within the portfolio to be able to cover the affordability. Now, when you're looking at top slicing, anybody living in the UK that has permanent residence in the UK is able to top slice. If you're looking at an expat or a foreign national that is wanting to do a buy-to-let, then we can't top slice in those cases. It would have to fit on rental affordability. This particular one is a client who is a first-time buyer. They want to secure their dream home in their dream village. And as you can imagine, they're all emotional about buying their property. They want to buy a property for 171,000 and it's a bungalow. That all sounds great so far. It has, though, unfortunately been allowed to get a little bit dilapidated. Although it's going to be a lovely home when it's finished, it does need a little bit of work done to it. And the client needs to get the funds in place quickly because they're going to be buying at auction. So they need the funds to be in place within 28 days. So the solution on this case, and this is a real case, guys, the solution was to provide a 25-year mortgage at 50,000 to complement their existing funds. So they had a deposit. It included a gift from a family member, which, as I've said previously, we're absolutely fine with. And we produced the decision in principle before the auction so that the client had that in their hands to prove that they would be able to get funding. So you don't always have to go the bridging route. Sometimes you can go the term route if you want to, or you can go the bridging route for your client and then you can term out onto the term product after the client's purchased the property and done the work. It's entirely up to you and the client when you're giving the advice. And this client now has the property in a village where properties now routinely sell for over 600k. So, you know, they've made a vast amount of equity growth there as well that we were able to accommodate. This particular client, again, a real client for you, but just to give you an idea of how we can help somebody that maybe has been in a bit of a struggling situation. This client had a divorce. It unfortunately caused a little bit of a breakdown. They really did struggle. He had to go back and live with his parents in his 40s, which must have been quite difficult for him. And it meant that he got some poor credit. So we advised our customer to maybe go down the shared ownership route to get back on the property ladder, which is what happened. And having found a home, we were then able to lend the money and help them get back on the property ladder. And this is one, again, where we were able to take a view on the credit that had been unfortunately gone the wrong way. And we did take a view because we knew once the client got in their own home, they got back on track of having a nice life again. They were able to then be able to, you know, get themselves back on track with regards to their credit profile. So that's it from me today. Has anybody got any questions? It's gone quiet. Any questions, guys?
None from me,
Okay.
Kay. Thanks very much.
Okay, so I hope it's been of benefit today. Derek, I hope I've covered off everything that you asked me to cover.
Yeah, that's been brilliant. Thanks.
You're welcome. And if you ever need any help, just to let you know, Lewis, who is on screen now, is the person that works with Derek with regards to Together. So he is there to support you and to support Derek should you have any inquiries. So you can always reach out to him, reach out to Derek. They're there to answer any queries that you might have, or go to our website, www.togethermoney.com, and you can find information there as well.
Thanks, Kay.
Thanks very much, Kay. Cheers, Lewis.
You're very
Much
welcome.
appreciated. Thank you.
Take care, guys.
Bye.
Bye.
Yeah. Catch you soon.
Bye.
Cheers.
Bye.
Bye.